Hello folks, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective, asking ourselves what happened today, what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, it's available to you there anytime, any place, any device. You can catch it right then and there. I'm going to do something a little different than I've done recently. Well, not so much recently, but pretty much all the time. And, you know, one of the hidden features or factors of TA today is that, you know, there's a lot on this site. Quite a lot, actually. You know, almost every morning there's some sort of a video, there's a kind of a general macro view. I've got a guest commentator that has produced some great material. He continues to put stuff up here every now and then. I post some stuff as well. But there's tools. There's a lot of good stuff up here that you can get to as a member or even as a non-member. You can get to most of these things. If you're a member, of course, there's a lot more. And I keep all this stuff going, you know, with the help of a couple of folks, primarily, you know, me looking at the markets, trading every day, seeing what's happening, and sharing that with people. And one of the things I share with on a real-time basis, and one of the things you can't appreciate unless you have the ability to do it, you know, is to come into this TNT room, the Teach and Trade room, as a subscriber, where I share my thoughts. If you remember yesterday, I talked about these markets should rise. They should bounce. And I gave you the reasoning behind it. And pay no attention here to the Russell. That's a bad quote again. They were all up today, all up about 1% to 1.25%. And I told you last night that, you know, the odds favored a bounce. It was set up. Everything was there. And not only was it set up to do it, more than likely it probably would do it. Well, sure enough, that's what it did. Gapped up this morning and never really looked back. How do you know those things? I outlined them yesterday for you as to why it looked that way, and it had to do with the fact that there really weren't any sellers at lower lows. And I communicated that to you last night. Well, real time, I communicate that to people as well. And if you happen to be a subscriber, you know that. If you're not, I just want to share that with you. And that is during the day, you know, there's 30, 40 people in here, and we're talking, and I'm telling people what I see. And this is what I wrote today. And I'm going to just leave this as a thought. You know, my take here, and I wrote this, what, at 1:28 p.m., and that's Denver time. That's my time. Actually, that's that's my time. Markets close 4 p.m. Eastern, 2 o'clock Mountain. So my take here after watching the action today is we're set up pretty good to bust this higher tomorrow. So I'm maintaining my thoughts on higher prices to come. There's just these are just inside days so far, right? So if you look at the charts, and let's pop up the S&P. And let me grab it here. There we go. If we pop up the S&P, we're actually, let me see, did we get over it at the end of the day? No, we stayed under it. So it's an inside day. So you had less volume, inside day, and you're nestled right up here at the top. And that's what I was talking about when I was chatting, and that was true on everything but the Dow today. Everything was inside days. So even though they're inside day, there's not a lot to go on other than the way it has behaved. And if I was watching the trades today, the behavior was positive. And you know, one of the members says something, and I come back and I say, you know, oil's the big unknown. It could spike things either way. But if it just hangs here and it doesn't dive, and that was the last half hour, I would think we break higher. And there's about 20 points more on the S&P to go if that happens. That's the way it looks to me. Now, what am I basing that on? And again, you know, I remember, 15, 20 years ago when I was trading, real time was like next day. Real time now is like instantaneous, right? It's a whole different world anymore, with the ability to share information. And if you have someone who has been around a long time, is any good at what they're doing, you can learn a lot from them. And hopefully that's what happens here, with the members. They get value out of what I'm giving them. If I look at what drove me to this, today, and what made me think that this would happen is here's the intraday, and we're talking about 2 days here, and I've put it on a 2-day chart. I'm going to pull it right into this part of the chart. So this is the last 3 days of trading. That would have been, all 3 days this week. So here's Monday straight down, right? Tuesday straight down, and this was after 3 days last week. But then we started making higher highs. Now, what I would be looking at, and the reason I was saying that, is you really have 2 swing point highs, and I'm on a 15-minute chart. It also looks the same on a 30. It's just going to be, it's just going to be laid out a little bit differently, but you've still got the same swing points. And what do I always talk about? I talk about the fact that if the market, you got to look at multiple time frames. If a stock, if an index, whatever, if it breaks out on multiple time frames, it usually gets a pretty good push, and is usually good for 2 to 3 bars minimum in the direction of the break. You got 2 swing point highs on a 30-minute chart intraday. That's the long-term time frame. At least that's what I use. And if you look at it on a 15-minute chart, I'll pull it back again on 15, it's the same thing. They're the exact same spots. So if these things break, they're going to break multiple time frames. And not only that, if you wanted to pull this down to 5 minutes, which is my short-term chart, and I'm going to pull it in tighter, you've got a swing point here, the swing point there, and you've got 2 swing points. Well, just one here, I think. Let me pull that in even tighter. 1, 2, 3, 4, 5. No, it's going to be 1 swing point. So you're going to have 3 swing points on a short-term time frame. So you're going to break on all 3 time frames if this thing spikes. And it's set up to do exactly that. And why is it set up to do that? Let's go back now to the 15-minute chart. I'm going to pull this in one more time, and I'm going to show you what it did today. And these principles I talk about, they work intraday, they work monthly chart. It doesn't matter. They work across all time frames, whether you're a day trader, a swing trader, a long-term investor, or whatever. If I look at this and just count these things up, 1, 2, 3, 4, 5, 6, that's a swing point high as well. So that swing point high, if I draw it out, what do I draw out on daily charts? I draw out retest, regenerate zones. You break out here, you get over it, you retest. And it retests the rest of the afternoon, never does break it back down, right? Again, it's holding. In other words, there are no sellers at this price point, right? In this price point, there's no sellers to take it back down below that low. That's a regenerate. It's going to try to break higher in the direction of the trend. And if you go back and you look at this, across all these time frames, let's do it a different way. What was this? This was a retest regen bearish, right? That was the low. Comes under it, breaks it, way more than 6 bars. What happens after 6 bars? It makes it pretty hard to get over. And what does it do? It does get over for 1 bar, but doesn't confirm, comes back under it. That was yesterday, that was this morning's trade up. Holds though, eventually takes it out. When it takes it out, what does that do? That says it's a range trade. Where's the range? Well, probably at least here, right? Probably in that range at least. But if it breaks these swing point highs, the range expands. And it's probably going to expand up to there. And so when I pull that back now again, let me pull it back one more time. If I pull that back, you can see this high, that high. If we go and expand that range again, and if we say, okay, this was probably the range there, where's about an equidistant one? Well, it's about right up to that one. And what is that? That's another swing point high up there. That becomes the target. So when I say it can move another 20 points or so, I'm just looking at the charts and saying, okay, this thing could easily move up into this bar. It could easily move into this next swing point low to do a retest, regen, bearish there. Where's that price point? It's right about 250. That's 20 plus where we were at this when I was talking about it. That's how I get those numbers. That's what I'm telling folks. And I'm teaching them how to read these charts intraday to set themselves up for better trades, over time. So I would not be surprised tomorrow to see this thing break out. It's set up to do it, and if it does, it's probably going to have some juice on it and probably going to take it up about 20 points as a result. So Teach and Trade Room, another one of those tools here at TA Today, because I'm trading all day long. I just share my thoughts. I share those thoughts with respect to trades that I see. And I actually have a portfolio here that I manage for folks. If I pop in here, here's the morning comments, and there's the portfolios. Those portfolios are for folks that just can't trade during the day. But if anybody has the opportunity, let's say that you're working your real job, which is what I used to do. That's what that portfolio does. It sets targets. It scales out, scales in. It's probably not going to beat the S&P unless you're in a choppy market, and then it has a better chance of it. It's probably not going to beat it. It would probably beat it in a down market as well, but unless you're 100% invested or you're out picking the market, you're not going to beat the market, and you don't want to be 100% invested all the time. Otherwise, you're sitting there waiting on the big drop, right? I mean, unless you want to ride 20% drops, or 10 or 15% drops, because it's going to take you that long to reposition. Otherwise, you'll be jumping in and out, which means you're not going to be in, right? So working man's portfolio is a way for folks to stay in this thing. And if they have the opportunity, they can come in towards the end of the day. They can see what my comments are. And if they want, they can do a little repositioning if they have time in their busy days. A lot of stuff on TA Today. I just thought I'd share that because I thought today was the way it's set up was really nice. You don't get those very often, and it was clean. And the reads are very clean. They were last night on a daily chart. They were also clean here on the intraday chart. Whereas if you're just looking here, right, you don't quite see that. It's an inside day. Yeah, it's back up. I mean, there are some positives here. I told you last night the two areas of resistance that one has to watch are right here and there. And this one probably would not hold it back, and it didn't, right? It's back over it already. This is where it wants to go. That's where the real test is going to be. You got two tests there if you think about it. And this is what's important if you're going to read the tape, is to figure out where areas are important and where they're not. That's going to be the important area on the way back. Why? Well, because you've got two or three things that make it that way. It's a breakdown bar. This was the big high volume, not actually the high volume bar is this bar. That's this high volume bar, which is the top of that one. But this was the juice up off the Fed in December. They got that big spike going and made new highs. And then so that's a big bar, right? You got good volume on it, and you got good volume right up underneath it. Right over it on the bottom of the next bar. And then you've also got one other thing you're looking at here, and I didn't draw this all the way over, but it's a breakdown bar over there as well. So that area looks like a critical area. And if you know that's a critical area, when price comes back to this area, you want to see what happens. Does the volume expand or does it contract? How does it attack the area? Does it get there and it just goes sideways and can't get over it, or does it immediately roll over? The behavior, just like I was showing you intraday, is important on the daily chart when you're thinking about swing trades of multiple days and weeks. And those are the kinds of things you have to look at. This particular setup doesn't tell us much other than, there's some strength in it. And if it gets a little bit higher tomorrow, then more than likely we're going to go back to that area and test. That's the S&P 500. And the reason I actually, one of the reasons I took the time to go through all that is there's not a lot to talk about tonight. You got inside bars here. You've got them on the composite, on the NDX. It's all the same, right, on the Russell. Every one of them's inside. Inside doesn't tell you much. Matter of fact, inside usually tells you that you're going to have to go with the continuation of the trend. But since we have the ability to look inside the day as we did here, we can see the setup and the potential breakout with some juice. And that's what leads us tonight to say that more than likely we're going to see some carry through probably tomorrow. If I look at the major sectors, pretty much the same thing. The only thing I would point out here is the XLE. XLE would not go down today. Of course, now it didn't have a great day, but if you look at the fact that this thing has held at higher highs when oil continued to make lower lows, right? That's a bit of a tell itself. Oil today was up about 1%. It was an inside day as well. Lower volume. Tomorrow's going to be kind of a critical day here as to whether or not this is going to come back up to do its bearish retest regen and buy some more time for these equity markets to try to bounce. That's where the retest regen is going to be. It's already more, let me see here, this I think is already tested once. That low was 2053. Yeah, we've already tested it once. So it'd be the second test back up. That puts it about a 60% probability, I think, to actually regenerate lower again. Now, you know, all as we've talked about, and we'll pull over the monthly chart, this thing is deeply oversold already. When it bounces, it's going to be a heck of a bounce, folks. And it's going to be a violent one, right? A snapper rally is what I used to call them. And I don't know where it's going to happen, but you know it will come at some point, so you keep watching. Bonds come down. The low yesterday where the gap was 130.19, they come down into it, trade off of it, and back up. Bonds are going to try to test the top again, that high volume top from yesterday. I think they're going to fail there, but that's the setup, and that goes a little bit contrary. If you're thinking bonds opposite of equities, it goes contrary to equities rising tomorrow, but that is the way it's set up. Silver, gold. Silver holds pretty tight today in that range. Gold, and I've been talking about these. If you haven't looked, I was talking earlier about that on the front page here. You know, I put in, you know, videos in the last 2 days. I've highlighted gold, and the reason for that is gold is trying to come back up and test a swing point high. Gold, as we talked about way back in December, gold still has to get over this breakdown bar. That's about 111.66 on the GLD, and then it needs to get over that high, 120.50. If it does that, it changes the picture. And why would it change the picture? Well, it's getting over a swing point high, but more importantly, it's going to take out a retest regen bearish, right, if it can get over this high. That's the key area. When gold does that, if gold does that, you're going to see a huge spike in the GDX, and the GDX is coming right back now in to test its swing point low again. This to me is kind of the lead dog here. In other words, this is telling us that this market wants to go higher. It tested here, it's testing again. If it gets up and into that, then we're going to have a good shot at getting over it and getting into the next bearish retest regen. And if it starts doing that, right, then something else is going on. The other thing, if you look at this, is you actually have a small ABCD structure to get you right up into that price zone. And that looks to me where this thing's trying to go. So if you haven't looked at gold stocks, you know, today they wanted to trade down. They couldn't hardly keep them down. It's just too much buying interest in them right now. So, you know, if you haven't taken a look at them, you might want to. Because if the gold really does start to turn, you know, there's a long way to go to the upside. Dollar. Let's look at the dollar real quick. Dollar goes up again, spikes one more day. It did trade back down 34. Let me see, what was that number? 34.34. So it left another gap volumes, you know, pretty decent up here. You still haven't seen any kind of a huge volume spike, but the ABCD structures are done. It looks to me like this is just a matter of time before it tries to roll. At the same time, we know that this market doesn't want to give it up in terms of, so, you know, there's your ABCD structure. The market doesn't want to give it up in terms of the euro being a big piece of this. A lot of pressure on the euro, continues to be on the euro. If we pull the euro up, you'll see what I mean. It was another gap down on this thing again today. This thing also has finished its ABCD structure, more than finished it actually, on the way down. It was finished about there. So now we have, you know, complementary projections having been met now in the equity in the currency markets, which suggests that dollar's probably going to at least take a pause, if not retrace. And if that's true, that should help commodities, should help equities as well. Okay, what else? I looked over at the European markets. They didn't really tell us anything. They're probably going to soar tonight as a result of us. And there's really not much else to say, which is why I took as much time as I did at the beginning, giving you an idea of some of the things we do at TA Today. And if you're inclined to learn how to read the tape, learn how the markets work, and better your probabilities with respect to what you're doing, just come over and get started, right? You can check out all the details here. You can click on this, give you all the details of all these tools. You can click over here with Trade with LA, which, you know, gives you the details of how that works. And then of course you can get started, pop in here and get started. And another thing that's available to you is if you come in here, there's an earn free services. All you got to do is click on this, folks. If you or somebody else you know is interested, you know, recommend somebody. You can get 3 months of free service if they join. You know, I think the best way for us to, you know, learn and trade together is to get more people involved, and you know better than I do other people that might be interested. So we try to reward that here at TA Today. You know, refer a friend, a colleague, a family member, you know, get them going and get some service for yourself for free. Have yourself a great night. You know, tomorrow it looks to me like it's going to set up, it's already set up to try to spike. If it does, that's going to take us back towards that resistance zone I was talking about. And if we get back up there, then that would be, going back to the S&P, then that would be probably a spot where I would be a little bit more careful, right? The first trade's the easy one if you're able to get on top of it. But if you get back up into this area, that's going to be the key test area. So what I'm talking about one more time is up in here, right? That's going to be the key test. That's not that far away. Let's get the actual numbers on it. We closed today at 2026 basically. That number is going to start at 2054. So 26 to 54 is about 28 points. 28 points, you got to start thinking this thing's going to run into some deeper traction. If I'm a short seller, that's where I'm going to be looking. Until next time, you have yourself a great night. Thanks for joining me. Tell a friend, tell two. Matter of fact, tell one to join us and get some free service for yourself. Have a great night, folks. Good night.